huge risk on flows being seen, guys, after that US jobs data that just came out. My goodness me, what just happened? Let's go through that first. So going into this data, markets expected that 8 million Americans would have lost their jobs in May. And they thought that that would push the unemployment rate up to just shy of 20%. But what actually happened was 2.5 million Americans gained jobs in May. And that brought the unemployment rate down to 13.3%. So guys, in wake of this data, we have seen big risk on flows. So I'll go through the whole market. US equities and global equities boosted. Crude oil markets boosted. What about FX markets? Well, slightly more mixed reaction because the dollar initially boosted because it's strong US data and algorithms, computerized trading systems just see strong US data, buy dollar. They're very simple. So dollar initially strengthened, pushing all of its major counterparts lower. However, amid the risk on, dollar has actually come off again, and now dollar is pretty much flat or in the negative on the day. And it turns out that the winners from this data in the FX markets have been GBP, AUD, NZD, those lot. Meanwhile, havens in general, so FX havens and gold, bonds, have all been hit quite hard by this data. So why have we seen this risk on reaction? Well, that might seem obvious, but just to state the obvious, the US economy is clearly in a much better place than we had thought previously. So based on that, the fact that the US economy is in a much better place than we thought, only a couple of hours ago, is that going to be enough to save the dollar? Well, as evidenced by this market reaction today, it doesn't look like it. I mean, I kind of hinted at this yesterday in the blog when I did the question of can NFP save the dollar? And good NFP data like we saw today creates risk on, which reduces demand for havens, and dollar is a haven. So no, in this climate that we're currently seeing, it looks like good data isn't going to help USD. Everything is just going against USD at the moment, guys. Like, this is 9 straight days of losses pretty much for the USD now if it finishes in the red today. Why are we seeing so much loss in the dollar at the moment? Well, it's partly because we've seen so much risk on over the last couple of days. This latest leg of risk on is because of that US data, but before that, it's been because of a lack of escalation on US-China tensions, growing optimism about the Eurozone because of ECB stimulus, and moving towards an agreement on that EU recovery fund. Also just that general theme that we've been talking about now for months about economies being reopened after coronavirus lockdowns and infection rates in key markets still moving lower. All of these things have been a negative for the dollar, but there's one thing on top of that is the biggest negative, and that is the Fed. The Fed continues to outprint all of the other major central banks in the world combined. Literally, when you look at the rate at which the Fed is expanding its balance sheet, it dwarfs everybody else put together. So there's all these new dollars being flooded into the system. And that just is a massive dollar negative. And it's a massive risk on plus for risk assets, but it's going to keep hammering the dollar. Unfortunately, guys, at the moment, it doesn't really look like anything can save the dollar. But we shall see how things change over the next couple of weeks. That is pretty much it from me for now, and I'll see you in the next one.